Hey everyone, Jeremy Peterson here with Vesta Real Estate. It's time for another market update. And first let me say that there's been a lot of news headlines, both helpful to the housing market and hurtful to the housing market. There's been so much happening, it's kind of hard to keep up. Just to give you a couple examples, for instance, next week, tariff is supposed to go into effect for lumber, and that also includes cabinets and vanity products being imported. So that obviously will make things more expensive to build a home. And also, almost in the same breath, we hear that there might be a housing affordability crisis announced, which means that housing or building products for housing will not be tariffed. So who knows what's going to happen? We'll just have to watch and see there. Things are certainly uncertain. In finance news, we have the Federal Reserve, which obviously reduced their overnight lending rates recently, and we've seen mortgage rates come down a little bit. Also, there are new rules proposed for banks, which will allow them to borrow or buy, I guess, more treasuries from the government. And these rules are being changed because foreign demand for our national debt in the form of treasury bonds is declining. And so that's a concern. And if there is no demand for our bonds, then we actually see rates go up. So interest rates right now, let's take a look at our interest rate chart. And we'll see here that rates are down in the bottom part of their channel, but they definitely are elevated up, up above 6%. And there doesn't seem to really be anything that's going to bring that down. The Federal Reserve was buying mortgage-backed securities, and that's what kept rates so low for so long before, but that's not happening anymore. So we can just expect mortgage rates, to be kind of in a freer market. Although, in another news headline, the federal government is talking about privatizing Fannie Mae and Freddie Mac. That's a whole separate discussion, but that would have a huge impact on the market as well. So house prices recently it's actually quite interesting. This last summer we saw prices peak. We actually caught back up to June of 22 in house prices, and then swiftly prices dropped. And in fact, they dropped so much, we actually saw a big negative price growth print. In fact, the lowest price growth print since 2012. Quite the drop. And then this last month in September, prices have bounced back up into positive growth territory. So a little bit volatile there. We obviously have the government shutdown happening right now, which is going to affect October's numbers for sure. And the last time we had shutdowns happen, it affected sales significantly for several months afterwards. Looking at our price chart again here, we can see that if we take our house prices and adjust them for inflation, house prices have actually become the most affordable, at least they were in August. They were the most affordable since 2021. So that was a significant improvement for house prices on an inflation adjusted basis. Obviously, as more money's printed, if house prices stay the same and there's more money in the marketplace, then housing becomes more affordable. So final thoughts here. There's a municipal election coming up in a few weeks. Obviously, there's different candidates that are promising different things, and some have a direction they want to take the city. Be sure to vote your conscience. Be sure to do your research. Be sure to vote for a level-headed leader let's try to avoid the populist revolutionaries if we can, and keep the lights on in your city and get the potholes filled. So that's the update for now. We'll talk more about real estate next month. If you have any needs, property management wise, buying, selling, you give me a call. Thanks for tuning in.